G'day everyone, welcome back to Pete's Investing. It's February 22, 2024. This is a high-grade copper technical analysis. Just be careful, we're in a trending channel with some bullish movement at the moment, and there is a bearish divergence on the lower time frames. I'll cover that in a second. Just some quick latest news updates. This is going back to February 5. So the Gates-backed cobalt metals using AI to explore for battery metals, plans to fast-track a large high-grade copper mine in Zambia within the next few years, potentially requiring $2 billion. They might consider partnerships or an IPO in the coming years to help finance this project, aiming to capitalise on the growing demand for critical minerals essential for clean and electrical vehicles. So I've got the weekly, daily and hourly. If you're a regular viewer of the channel, you'll know that we break these down and look at the trends. So first off, on the weekly, you can see there we've hit these bearish arrows, which indicate a downturn, and it doesn't mean full scale reversal, it just means a bit of a retrace usually, and in some cases it goes even further. And then we've got the bullish arrows as well, which indicate a reversal of those to the upside. So we try to pick the tops and bottoms. And at the moment, you can see there we're still stuck in this bullish movement to the upside before seeing a downturn. No sign of a downturn yet. And on the ADX 25, our trend indicator, it's showing a bearish signal at the moment, but it looks like it's going to break to the upside within the next few days possibly. Our CCI 150 is our divergence indicator, and that's showing a movement in line with the price action, so no divergence on that. You'll notice back here we had a bullish movement on the price action, higher highs versus lower highs on the CCI 150, and that indicated a drop, and it eventually did. Now, if I draw a Fibonacci on that, we aim for the 23 to 38% level, which is that highlighted rectangle area. In this case, it dropped to the 61%, which is always a key area to look out for. It's either going to bounce from that 61% at an ultimum level, or it's actually going to, if it breaks much further to the downside, it'll be a reversal. In this case, it bounced and made further upside. So in this case, it did hit our immediate target area before then recovering and going sideways for the last few weeks. On the daily chart, again, we've got this bullish momentum on the ADX 25. The CCI 150 is currently moving in line with the price, but notice we did have almost a double top there. Possibly consider that a double top on the CCI 150. That, in theory, should have been near that resistance area, but that still fell off, so that was close enough. It still fell off. And again, if I drew a Fibonacci on that level, you can see there the 23-38% target was hit in that area, but it went as far as the 61%. And then lastly, we've got the hourly chart. Again, you can see there bullish on the movement on the price chart, but bearish divergence on the CCI 150. And I've drawn another target area there, the 23-38% level, so we'll get to see where that's going to land. For this to then continue to the downside, those bearish arrows are indicating a downturn, although notice here it showed bearish candles, but it went further high. So it doesn't necessarily mean it's going to reverse from there, but we try to use it in conjunction with a bearish divergence in this case, and we'll see how it goes in the coming hours and days. Again, we use the bullish candles, bullish arrows down here in support of this bullish divergence to help us with that movement to the upside. Now, it's worth repeating, I'll get a few questions regarding where do I place my targets and exits in terms of taking profit. So again, I use these in terms of retracement with these bullish and bearish divergence. I use a 23-38% level target. But if I'm trading a trend, for example, if I was trading this little trend here where the CCI 150 breaks above these multiple moving averages, and the price also breaks above those moving averages on the price chart, and it's above the exponential moving average 9, which is the pink line, I go long, and I exit when the price drops or the close is below the exponential moving average 9. So if I blow that up, see it more closely, for example, here, wait for the bullish signal on the hourly, wait for the CCI 150 to break above, the blue line to break above the red line, and the price to close above the exponential moving 9 as well as the multiple moving averages. So enter somewhere long around there, let it ride, and close it out when the price drops below the, you can see there, it fell below the moving average 9, exponential moving average 9. So that would have been a nice little trade to take. Doesn't always work that perfectly, but on average, that's how it works. See another entry there potentially. Wait for this to turn up. You would have gone long somewhere there. You ride that up and you would have exited on that red candle when it breaks below the exponential 9. So hopefully you got value out of that video. Hit that like and subscribe button. Hit that notification bell. Thanks for watching and see you in a future video.